Bitcoin just handed us a brand new all-time high, but the real headline isn't the number on the screen. It's what I saw hiding in the order books the moment that the fireworks went off. And I'm talking 9-figure stealth buys that could sling us far past what the charts are saying the ceiling is. So picture this, right? I'm sipping a not so humble double espresso at 2 AM, telling myself that I'll take a night off from the charts. Spoiler, 2 sips later, the BTC ticker pings $112,000 and I nearly kind of baptized my keyboard in coffee. Now, you've been there, right? And that kind of panic-flavored cocktail of yes, we're mooning, and wait, am I late again? So, well, buckle up, because tonight I'm going to be walking you through exactly why that candle printed, who really is lighting the fuse, and how the next target, yeah, Kyle Raidhead's cheeky see you at 150k, might actually end up looking conservative. So let's rewind just a few hours. The market had been kind of chewing its nails for 2 solid weeks, stuck in the tightest consolidation that I've seen since my grandma tried keto. Lots of pressure, zero release. Right. Now, most folks, were convinced that we would probably need planets, the halving, and maybe even a Taylor Swift dropping a Bitcoin single before we'd actually top May's record. Then, out of nowhere, the balls kicked the salon doors, at least off of the hinges. Now, 1 minute we're kind of flirting with $109,000 support, the next we're painting $112,000 and liquidating, in the process, $217 million in shorts, faster than you can say liquidation cascade. Now, here is the twist. The blast off wasn't just random. You had economist Timothy Peterson, who warned earlier in the day that Bitcoin, if Bitcoin didn't break into a new all-time high within the next 2 weeks, then we'd be stuck waiting until October. Now, the market apparently heard him and said, challenge accepted. And, well, the timing really does matter, because every big player that I've spoken to this month has one eye on Q4 macro risk. Now, they wanted confirmation before flipping the on button, or the buy button on the buy bot. Now, once the breakout hit their thresholds, they didn't just tap market buy, they actually carpet bombed the entire order book. Now, I watched a single address scoop up 400 BTC in under 8 seconds. So imagine a Dyson vacuum, but for Satoshis. Now, before you and I start celebrating like we've already withdrawn profits, let's kind of talk about the sentiment, because Mr. Market loves nothing more than flipping the script on crowd psychology. Now, the Crypto Fear and Greed Index shears back at 71. That's solid greed. Now, the exact same reading that we saw 30 days ago, right before a brutal mid-June shakeout. The translation is, the optimism is tasty, but too much sugar can rot your P&L. Meanwhile, of course, the altcoin season index is chilling at 26. And that's a polite way of saying, sorry, alt fans, it's still Bitcoin's karaoke night. And here is a stat that had me raising an eyebrow. $1.04 billion flowed into the US spot Bitcoin ETFs in July alone. That's not dorm room traders or weekend FOMO. That's institutions, pension funds, insurance giants, maybe even your aunt's sleepy 401k, all quietly moving size. Now, eToro's Josh Gilbert called it the first real bull run with institutions front and center. And, well, I couldn't agree more. Now, in prior cycles, hedge funds would flirt with Bitcoin like having, like it was a kind of guilty pleasure. But now they're actually putting a ring on it. And that, of course, brings me to the part which nobody sees on the candlestick. Leverage is a double-edged katana. Now, CoinGlass shows $1.6 billion in shorts still dangling at the $115,000 guillotine. Now, if price nudges a couple of $1,000s higher, that blade drops and we could witness the fastest melt-up since 2021's Elon tweets, everyone buys kind of episode. Now, the market, they loves symmetry. Short squeezes often overshoot rational targets and before gravity kicks back in. Now, if you're kind of day trading this rally, well, you want to keep your helmet strapped on because volatility is about to do some parkour. Now, speaking of helmets, let me kind of slip in a bit of a shameless plug. Our free educational Discord server is linked down in the description. It's where I kind of hang out with everyone else at ridiculous hours, charting and memeing with all of the degenerates that we have there in real time. Now, if you kind of tired of trading alone and maybe you're just looking for a place to kind of vent after a stop loss kind of gets hit, well, the door, it's wide open. Seriously, pop in, lurk, ask questions, roast my takes, whatever kind of keeps you learning. Now, the problem that most people face at fresh all-time highs is paralysis. Right? We stare at green candles like deer in LED headlights because, well, deep down we remember 2022's ice bath. Now, is it safe to buy? Should I wait for a dip? What if the dip never dips? Classic analysis paralysis. Now, I battled it too. In 2017, I watched Bitcoin rocket from $3,000 to $10,000 and told myself that I would jump in on the inevitable retrace. And, well, the retracement just never came until it was down 80% and my confidence was, well, MIA. And this time around, I had built a plan, wrote it on paper, and I had taped it to my monitor. Buy strength, hedge weakness, and never chase the Twitter hype. But dude, you say, isn't the macro backdrop a complete mess? Rate cuts ping-ponging, trader wars simmering, geopolitical chess everywhere? Sure, right? CoinStash's Mina Theodoru, I'm probably murdering your name, I apologize, actually kind of thinks that uncertainty is why Bitcoin's kind of soaking up so much capital, right? Institutions, they want an asset that lives outside of the fiat handshake. Even when headlines kind of scream recession, Bitcoin's kind of been the kind of cat that lands on its feet. And guess what? When the global economy eventually kind of exhales, the dry powder kind of sitting sidelined today could actually flood in like a busted fire hydrant. Okay, here's a quick anecdote. A buddy of mine manages risk for a mid-sized hedge fund. Nothing flashy, of course, just a kind of cool $1 billion in assets. Now, he texts me, "We just put 1% into the ETF. Compliance finally greenlit it." Now, 1%, it sounds tiny until you kind of remember that there are tens of thousands of funds like this. Each of them kind of trickles in even just 0.5%. And yeah, $150,000 Bitcoin kind of starts feeling a little bit conservative. Now, let's go ahead and address the flip side. Bitfinex analysts said that Tuesday traders were hesitant to buy near the prior high. And you might be thinking, why? Well, they fear the dreaded double top. Fair. Market structure 101, right? Failed breakouts, often kind of equals nasty reversal. So in fact, sentiment data showed that traders' optimism spiking exactly when we topped out on June 11th and July 7th, right? Right before mini crisis, the mini kind of crashes, I guess. Now, pattern recognition is pretty useful, but it's not prophecy. Now, what we saw was that price ignored the caution tape. It powered on through and clocked in a higher high. Now, Matthew Hayland stamped it, bulls are in control. Oh, and that kind of reminds me, liquidations, $217.55 million in short positions got completely erased in just 24 hours. Now, that's more than a GDP of some small island nations, obliterated by one single green candle. Now, if you've ever been on the wrong side of a liquidation cascade, imagine learning to kind of skateboard downhill, stuffing your pockets with firecrackers, and then lighting them mid-ride. It's loud, it's wild, and ends with you kind of nursing a few bruises, wondering why you thought it was such a brilliant idea. The moral is that you got to choose leverage like you kind of choose hot sauce. You start mild, you read the label, and you respect the burn. And because I promised to kind of show my work here, here's a quick mental walkthrough of the kind of bullish cup and handle pattern that Kyle Raidhead kind of pointed out. Now, the cup is the big swooping bottom, since late May draws down. Now, the handle is the recent consolidation, right? Break above the flip, $112,000, and the textbooks project a measured move, roughly equal to the depth of the cup. And surprise, that calculation puts us at an eyeballing the kind of $150,000 neighborhood. Now, technical analysis is not gospel, of course, but when price action, ETF flows, and institutional chatter all hum at the same tune, ignoring it is like wearing noise-cancelling headphones at a fire alarm test. Now, this one, it might just shock you, but I'm not a financial advisor, and nothing in today's video is financial advice, right? Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is for entertainment and educational purposes only. All right, let's exhale here because we've kind of ticked the compliance box. So let's talk about the strategy, right? If you've got long-term conviction, dollar cost averaging still works, even at new highs. And it's because you're smoothing entries over time rather than just chasing candles. Now, personally, I split DCA into two buckets: automatic weekly buys on Kraken. Yes, that's kind of my go-to exchange at the minute. And the affiliate link below kicks a little back to the channel and costs you absolutely nothing extra. And of course, the second thing is the opportunistic ads on high volume breakouts like what we saw. And it's the kind of financial equivalent of eating vegetables daily, right? Then kind of wolfing down pizza when life hands you some free slices. Meanwhile, of course, short-term traders might look at key levels like $115,000 is the liquidation line. Punch through that and you can watch for a potential blow off into the 120s and even $122,000 ranges, where prior fib extension levels do cluster. RSI on the daily is flirting with overbought, but it's not screaming it yet. And if we do see a pullback, 108K and 105K are logical kind of catch zones. Previous resistance often flips into support. So keep alerts set because Mr. Market loves 3 AM shenanigans. And now you're probably wondering, what about altcoins? Is Ethereum about to steal the spotlight? Well, the altcoin season index says not yet. Historically, Bitcoin dominance peaks first. Only after the king calls off to do altcoins usually run. So I'm keeping a side eye on ETH and things like XRP, Cardano, hell, maybe even Solana. But I'm not rotating heavy bags until I see BTC dominance curling over. Remember, missing a few percentages on the exact rotation is perfectly fine. Capital preservation, outranks nailing the kind of top. So speaking of capital, here's a bit of a spicy stat. We're in the first crypto cycle where ETF flows outpace miner issuance by a country mile. Now, back in 2021, miners could shape supply shocks. Today, spot ETFs are vacuuming up more coins than miners can spit out. That structurally tightens the float and sets the stage for something that we haven't really witnessed before. And I've been talking about how Bitcoin's carving and writing a history of its own right now, and we can't really look back and say that history repeats itself anymore. Okay, so it's important that we understand that there are some underlying variables that have indeed changed. Now, supply squeezes under strict US regulation, for example, you don't want to underestimate how different that is from the last cycle's Wild West exchanges. And while we're talking about exchanges, security PSA. If you're swinging sizable bags, get a hardware wallet. Exchanges can freeze, they can go down for maintenance, or even play hot potato with sovereignty. Now, I keep trading capital on Kraken Pro because its cold storage ratio and transparent audits kind of give me peace of mind. But my long-term stack lives offline, where only a house fire or an asteroid can potentially reach it. Now, the affiliate link below obviously helps the channel keep its lights on. Just remember, custody is ultimately king. So you can probably check out that ledger link in the description below, which is also an affiliate link. Let's zoom out for the 30,000-foot view, right? Bitcoin's new all-time high didn't just shatter a price level. It shattered a narrative, or the narrative that was circulating at the beginning of the year, how Bitcoin was not going to have a new all-time high in 2025, right? The narrative that we've kind of needed was the retail euphoria for the liftoff, right? But actually, institutions are steering the ship, and that changes everything from volatility patterns to liquidity depth. Think tankers versus speedboat. They turn slower, but momentum, Once it's moving, good luck stopping it. But with great power, yep, comes great counter narratives, which who would have thought, right? Now, skeptics, of course, they will point to previous optimism spikes, followed by dumps. Now, they'll cite macro, black swans, regulatory lightning bolts, or even, that miners need to sell to cover raising operational costs. And they're not wrong to be cautious, of course, but I like to build kind of fail-safes into every single plan I have, right? Stop losses, hedges, dry powder. Now, the difference that this cycle is the kind of relentless bid from entities that can swallow dips with an absolute yawn, right? So unless we see a seismic rug pull, think ETF revocation or a coordinated mining ban, the path of least resistance, it still angles up. And do you remember my skateboard analogy earlier? Well, here's the adult version, right? Driving a Tesla on autopilot, right? You still need hands near the wheel, eyes forward, right? Technology helps, but responsibility is solely on you. So don't just copy influencers, not even me, right? Use their insight as a kind of steering and starting point, right? Then, of course, stress test it with your own research. And I can't stress that enough. Okay, before we land this plane, here's a quick shout out once again to our free Discord community, right? We break down charts, we share on-chain dashboards, and probably oversee rocket ship emojis, right? And it's 100% free. The only rule is to be kind and to bring memes. Okay, moment of truth then, the climax. All signals point to momentum continuing, right? Shorts are hanging by a thread. The cup and handle fanatics are eyeing $150,000 BTC. Will we slice through like butter, or will the market fake lift and dunk right away? Now, I can't promise either, but here's what I can promise you. Volatility, it loves company, right? And as long as you stay educated, disciplined, and maybe even a tad caffeinated, you won't just survive the volatility, you'll harness it. So if tonight's taught me anything, it's that opportunity rarely knocks politely. Sometimes it kind of shoulder checks at the door at 2 a.m. while you're kind of in your pajamas. So prepare your plan now, because when that 150K candle flickers on your screen, you're going to want to be the one sipping victory coffee, not wiping latte off of your keyboard. Now, appreciate you hanging out with me this long, so smash that subscribe button if you want more real-time storytelling around the markets, and check out the next video.